Hi everyone, hello friends. We are back for another video. This one specifically about terminology or basic terms that you need to know. In my opinion, these are I would say the most popular terms you need to know just getting into trading. So let's begin. So we all know what a stock is, of course, because we have been, interested in day trading. So a stock, a share of ownership of a company bought and sold on a stock exchange. We already know that. The bull market and bear market. So you need to know what type of market you're going into when you're trading. Bull market means price is going up or it's in a positive trend. You can make money in a bull run. Bear market means when price is going down or a negative trend is going on. You can also make money in a bear run. So always remember that you can make money no matter what the market is. If you ever get confused, bull means going up. So think of when a bull attacks you, like the horns, they attack upwards. When a bear attacks you, their paw comes down. So bull goes up, bear goes down. So this is an example of a bear and bull candle. Bull candle typically most of the time will always be green, depending on how you have your chart view. Sorry that this picture is kind of low quality. I apologize. But always know for a bull candle, which is positive, it will start at the bottom and it will close at the top because you're going from low to high because you're in a positive trend. Bear candle is the opposite. It will start at the top and then work downwards, and when the candle is done, it will close because the stock is going down. RSI, I think, is a pretty important term. Basically, it's a tool that you can use while charting that measures the speed and change of a price movement, showing if stock has been overbought or oversold in certain conditions, which I think can really help with day trading or any kind of trades you're doing in general. I use them for every single trade as a backup of should I get into a trade or not. Sell or shorting the market. I've kind of decided to add this in as kind of like a term because I've kind of noticed that a lot of people, when I'm watching videos and people have questions, they're always confused. How are they making money if the stock market is going down? Because most people only know as you buy in low and you sell high. Well, you can also make money going down. So it's called shorting or selling the market. You essentially are betting the price of a said stock will go down. You're selling something you don't own to then buy back at a lower price, and you pocket the difference. So essentially, say you have a friend and you tell them hey, if your stock goes down to this certain point, I'll buy some stocks from you, which, they would want, because if it's going down, they want somebody to buy into their stock. Think of it that way. It's not the best example, but it's an example. But you can make money when the stock market is going down by shorting the market. For market order and limit order, so these are two different types of terms, you will, when you start trading, you will get basically this little area where you'll be able to see buy, sell, limit, market, stop, to basically get in and get out of the market. So for market order, think of it as you were telling the broker, you want to get in now, no matter what is happening. That's why fast Wi-Fi is a must, because the stock market moves so quickly, especially if you're on NASDAQ, it is going insanely fast. So say you see on your computer that, for example, the stock market is at 1863 and you put a market order and you push buy. It might be, by the time the computer senses it, your broker gets it and sends it in, it might be 1865, which could be a difference in how well you're doing your trading, but there's no setup needed. You just get in at that moment. A limit order is essentially you set this up beforehand where you manually put in to your broker essentially hey, if the market hits the certain price, if it hits 1863, get in. So it will automatically get it and you will be for sure getting in at that price. The downside is the market might not reach that price. The market might get to 18634 or something like that, and it doesn't hit that 18633 number, and then it goes up. And because of that, since it didn't hit that exact number that you put in, you just missed a trade, which is always not a bad thing, but that's what mainly the difference is. So market order is instant. Limit order, you set up beforehand, and it basically helps you get at a certain price. Stop loss and take profit is probably like the biggest terms you'll ever hear, or the most often terms you'll hear. So stop loss should always be placed. You should always have a stop loss when you're trading. It limits the potential losses. Basically, instead of losing $1,000, you only lost a couple hundred. It's a security blanket. That's why earlier, for the bull market, there's like a saying that the bears make money, the bulls make money, and the pigs get slaughtered. You don't want to be selfish and greedy, and that's where there's also a take profit. It's a stopping point of when you're in profit to help keep your wins and you made your goal. What if, because there's been so many times, even my husband does this because I help him with trading, where I'll make profit and he notices it starts going up even a little bit more past his take profit, and he's like, oh my God, I should stay in. I'm like, no, you made your goal. Get out, because then the market can completely reverse and you just gave back your money. That's why bears make money, bulls make money, pigs get slaughtered. Do not ever get greedy with your money. Make sure you have a take profit. You can have it's called a trickling take profit, where say that example where you have a take profit and the market keeps going up, but you have a very strict stop loss that you kind of trail with it. And if it hits back down, then you get out. That's okay, but you have a strict stop loss, essentially kind of trailing that take profit line. But that's something we'll go over later. Support and resistance. This is also like a type of trading strategy, but this is a good term. Support and resistance. Support, a price level at which buying pressure may prevent the price of security from falling further. Resistance is the opposite, a price level at which selling pressure may prevent the price from rising further. Breakout. Once again, I do not know why these pictures came out so badly. When I made these, they were fine. But anyway, a breakout essentially is when the market breaks through a support and resistance line. So these are the two lines that we're bouncing off. See, like this line, the market bounced off multiple times. Same for this line. And then it finally broke out. This right here would be considered a breakout. This is also a trading strategy called mostly breakout strategy, but there's different types of breakout strategies, but that's a type. Prop firms. You're going to hear this a lot, especially when you're trading. So a main thing about trading is you need capital to trade, but some people don't have tens of thousands of dollars to start trading with. So then you get a prop firm. A prop firm, traders use prop firms' capital or money to make trades rather than their own. This means they have access to potentially larger amounts of money to trade with than if they were trading with their own personal funds. A lot of time with prop firms, what you have to do is you essentially have to take a test to prove they can actually trade. And then they kind of give you that account so then you can actually start trading. But I will make a whole video separately about prop firms. And I decided to make this video a little bit shorter, but the next video we're going to be talking about the psychology versus strategy of trading, and then we're going to start getting to actual trades and then prop firms. I think I might do prop firms right after psychology and strategy, and then go from there about actual strategies to do and tools that you should get while trading. So I hope that helped. Wanted to make a very quick video, and yeah, make your choices, follow your dreams, and I'll see you guys next time.